Kalispera Anthropos, welcome everybody to Economica, all about economics and finance. And the more I go through this budget projections, this OBR document, which I really don't need to have, because with the available data I do my own research. I don't need the OBR, it's pretty crap. So I want to add that if any investment fund would have scrambled to take the OBR data, well, they are crap as well. Anyway, my point is it's still the same. These data, they are totally inconsistent, and to me, for my humble knowledge, the projections that are here and here, they are mostly bonkers. They are inconsistent. Because why? For example, here I found another thing. So the LBRC is that it's forecasting that the Bank of England rate will go back up to 4%. Do they know what that means? If the Bank of England has to do a U-turn and hike interest rate, they will lose credibility. And so why? What is the consistency of having a projection of CPI inflation at 2%? So why the Bank of England should hike interest rate again? Where is the consistency between the OBR document and the budget document? So also here, inflation data 2.6, 3%. Well, I don't know which kind of drugs they take at the OBR. Inflation is 3.8, 3.6. Services inflation 4.5, 4.7. Rent inflation 4%. I mean, food inflation 4.9, it just went up recently. So the thing is that things go online because somebody puts them online. So if you're managing a website, you upload documents. So there is this all made up. The real thing is that these projections, they are all bonkers, and they know that they are fudging fake things, because they are presuming that unemployment will go back down to 4%, and then the Bank of England will go up at 4% with interest rate. So all this stuff, it's all totally inconsistent. But they don't have the guts to say, okay, we just projected fantasy economics in an official document. Good luck with that. So another inconsistency that I found, and this one is a pretty technical one, and it proves to me that the people in the OBR, as well as the staff that works at HM Treasury, they do not know how the UK economy works, and it's their own country and they do not know. So the UK economy, it works with the particular feature. So as you can see here, you see these dots here, these dots here. These are related with the Phillips curve, the output gap, and inflation. So every time the output gap it's negative, it means that economic growth it's below potential, so you have a negative output gap, as in this chart here. What that happens, all these dots, they push inflation higher. All the dots, they are here on the upside of inflation. So what that means is that because the relationship between inflation and unemployment it's flat, that's the Phillips curve, it's flat, the correlation coefficient. In the UK, for some structural features which are idiosyncratic of the British economy, whenever there is a negative output gap, as in here, inflation is stubbornly higher. Okay, and if the OBR knows that there's going to be a negative output gap in 2026, and then the economy will be at potential 2, 3, 4 years down the line, they cannot forecast that CPI inflation will go to 2%. It's technically and empirically inconsistent. And at the same time, they want to argue that the Bank of England would increase again interest rate to 4%. That's totally inconsistent. Totally inconsistent projections. So they want the Bank of England increasing interest rate, and down the line they say, okay, but the economy it's running with a negative output gap, because of the productivity downgrade. Okay, so you have a negative output gap. But the crucial thing is that something that you must know if you want to work at the OBR or the IFS or for the Exchequer or at the Bank of England. They know it. The Bank of England is the only institution that knows what they are doing. All the other stuff, that no comment. You must know, because it's your own economy. Then when you have a negative output gap, inflation tends to be higher. You have inflation that deviates above the price stability target, and it stays there for quite a long time because there is a stickiness component in the price adjustment of firms, and that makes the fact that firms have always tends to have higher inflation expectations. So if you have a negative output gap and you know that withstanding the negative output gap you have higher inflation, you cannot assume that you're gonna have lower inflation down the line. You cannot project CPI at 2%, and at the same time you pretend that the Bank of England hikes interest rate at 4%. Again, it's totally inconsistent. You see here. So the OBR wants GDP 1.5%. Bank of England has different projections. The OBR says that inflation will go to 3.5, 2.5, 2%. Look at the Bank of England. 2.8% 2026 if they are really lucky. Okay, and the biggest discrepancy here, what I've been really with my arms up in the air. The OBR says the unemployment, which is 5%, and they have the wrong data, going to 4.2%. Look at the Bank of England projection and look at the external other people who do economic projections as I do on my own with the ONS data without needing the crap OBR. They are totally inconsistent. And again, very simple. Whenever there is a negative output gap in the UK, unless there is a huge recession and consumer demand goes through the floor, right? But if you have a normally functioning economy which is running below potential, that creates inflation. So these projections are wrong. And the OBR cannot pretend that then the Bank of England goes back up to 4% with interest rate if the OBR projects inflation going down to 2%. So I don't have anything else to add, but the simple fact that they stick on their document that there's going to be a negative output gap, and with that inflation will go down to 2%, these two charts, they are inconsistent, because the past data 2023, 2024, 2025, what just the recent 12-24 months, what do they prove? That you have negative output, you have the economy which is stagnating, but inflation, it's sticky, it's higher. So when you have a negative output gap, you have high inflation. That's the idiosyncratic characteristic of the UK economy. Okay, so if the OBR misses this thing, that's not my problem. All I can see is that on my own I can have better modeling. And I repeat again the same concept. Whoever scrambled to have this data from the OBR and they have an hedge fund, they are pretty corrupt as well, because they probably will be taking their assumption for stock market bets with the wrong forecast. And that's all from me.